Hello, everyone. Good morning to you from this part of the world. And I'm so grateful, thankful, and excited to be with you here this morning. So, like we always do, let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, please let me know in the comment section by typing hi to me. So I'd like to see some feedback, please. Let's confirm that we are good to go. Can you hear me clearly? Can you see my screen? Let's get to it, please. So let's see what's have here. All right. I'm trying to load up my comments box. Give me a moment. Okay. Excuse me. All right, so I can see Azan, good morning. Valerie, good morning to you. Norway 76. Okay, good morning. 4514. M33 30240. All right. Hey, Carrie, how are you doing? Good morning to you. Thank you very much. Okay, Norway 76. Thank you for that feedback. I really do appreciate. All right, so let's take this as a positive confirmation that we are good to go this morning. And on this note, I'm so excited to welcome you to yet another promising session on the Xtrendspeed Live. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market from a comprehensive price action based technical analysis. During this session, we shall thoroughly be examining the financial instrument on our watch list for the week, and in fact, we have 5 of them on our watch list for the week. The first one being the USOILSPOT, the USTech100, GBPUSD, XAUUSD, and of course, we later on added the USDJPY to our list on Tuesday. So we are going to be looking at, I'm going to be sharing my findings with you as I've done a comprehensive analysis of these current market structures behind the scenes and to identify potential trading opportunities that we can capitalize on. So I will be giving you my findings accompanied by simple setups that will enable us to effectively navigate the market structure. And as usual, you know how we heavily rely on trend lines, key level, and of course chart patterns, which helps us to provide valuable insight into the historical price movement. And for those who are joining us for the first time, you are highly welcome. I'm always glad to have newcomers in the house. And what we simply do here is to come together as a community gathering in anticipation of the New York trading session. And during this time, we always review and manage our current positions while we also aim to position ourselves strategically for the trading session ahead of us. So this is what we simply do on a daily basis: 10 a.m. UTC, 11 a.m. West African time. And it might look a little bit overwhelming at first, sincerely, because this is your first time with us and it will take quite time for you to acclimatize with our style. But trust me, the more time you spend with us, you will get to understand how this works and eventually be able to use the information you have gathered here to make your own independent decision. So with that being said here, I welcome you all once again, and let's dive right into the business for today. And you all know how we do it. The first thing we want to be doing is to keep tabs with the economic calendar. And we all know these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And so for this is the economic calendar right now, and we normally focus on high impact events. And we are going to be looking at events from the US economic docket, the Japan economic docket, and of course the UK's economic docket, as this is because these are the economies that are governs the instruments we have been monitoring since the beginning of the week. Now, for today, Thursday, July 6th, we only have 2 high impact events, and both of them are coming from the US economic docket. So the first one here is the ADP employment change, which is coming up in about 2 hours from now, and this data is released by the Automatic Data Processing Incorporation. So this index gives us a measure of the change in the number of employed personnel in the US, and generally speaking, a rise in this indicator is always seen as a positive implication for consumer spending and of course stimulating economic growth. So a high reading is generally seen as a positive signal or a bullish expectation for the dollar, while a low reading is seen as negative. Now, looking at the previous data we have for the ADP employment change for the month of May, it came in at about 278,000, and we have a consensus that is economists are projecting a 228,000. So there's been a level of contraction in what majority are expecting. So we are going to be looking forward to what the actual data is going to be. Will it be just as expected, below expectation, or even beyond expectation? Then moving on, in about another 4 to 5 hours from now, we shall be witnessing the ISM Services PMI, which is normally released by the Institute for Supply Management, and this gives us it shows us the condition in the US non-manufacturing sector. And it is worth noting that the non-manufacturing sector does not influence either positively or negatively the GDP as much as the manufacturing does. So as a result, a 50 is anything above 50 is considered positive and bullish for the dollar, while anything below 50 is considered negative for the dollar. And from the data we have here from the month of May, we had a 50.3, and economics are projecting a data of 51, which has a level of positivity there. So we are going to also be looking forward to what the actual data is going to be. Is it going to be below expectation, beyond expectation, or it will come in just as expected? So these are the two high impact events we are going to be looking forward to today, and in fact majority in the market will definitely be anticipating this event, and of course we shall be seeing the reflection of this anticipation on the chart as price action. And that is exactly what we want to do now. Dive into the chart, read the current market structure, and identify potential trading opportunity that we can use to maximize or position ourselves ahead of the New York session. So as usual, the first instrument on our watch list for today is the US All Spot. Now, on the US All Spot, we have been witnessing a very interesting and profitable situation here since the beginning of the week. So we have been buying the US All Spot, and I told you yesterday that the OPEC Plus are having a seminar, between 5 and 6. That was since yesterday. There is a seminar ongoing, and in fact, they barred the Bloomberg, Reuters, and some other major financial news agencies from attending the event. And this is just a way of trying to control the narrative of what the outcome of that seminar is going to be. So as a result of this, I was unable to get some facts that I can use to deliberate on the current market structure today. But I hope before the end of the day I should be able to get something, and so tomorrow we shall be discussing the highlights of the seminar here and use it as a guide to manage our current positions, while we also look out for more opportunities on the US All Spot. So far so good this week. We have been buying anyways, as majority in the market anticipate the outcome of that event. Now let's run through how the week started for us on the US All Spot and how we took advantage of and what led to the idea of buying the US All Spot. So the first thing we saw here at the beginning of the week was this ascending channel after identifying the series of higher highs and higher lows in this market. And as a result of this, we connected the series of higher highs and higher lows, which gave us this ascending channel that you can see on your screen right now. And in fact, this channel has been guiding our trading activities for the last couple of weeks now. And when we zoom into the current structure, remember we had a key level situated at the $70 mark area, which we said we were going to be using as a yardstick to guide our trading activity for the week. And you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for structures and patterns that will support the idea of buying the US all spot. And in fact, throughout the course of the week, even since the beginning of the week, price action has been finding buy pressure above the $70 area to further give us the confidence of buying this commodity. So at the beginning of the week, we saw this flat channel initially, which came into fruition after price action was trapped within the $70.75 level, and of course the $70.40 level to give us a flat channel to work with. And you know how we do it in this community. As soon as we identify a simple flat channel like this, we want to remain patient, waiting for structures like the breakdown of the support line for selling opportunities or the breakout of the resistance line for buying opportunities. And remember, I told you all on Monday that I already had a buy position running after the breakout of structure, and that we need to see how this is going to play out if we are going to be having another opportunity to join a move to the upside. And now we saw this on Tuesday. We saw this buy potential here on Tuesday morning, and we anticipated that we are going to be buying if price action continues to break out of these levels. So on Tuesday, we added a couple of more levels here. We added this one. We added the $70.75 area where we said a breakout retest will welcome buying opportunities. We also added the $71 level. And in fact, during the live session yesterday, we added another one, had the $71.40. And of course, we added one more here at the $71.80 level. So all these levels were levels we were looking out for buying opportunity if price action breaks out and retests the structure. And since then, price has been moving just as expected. And if you are still running in this trade, you will currently be running in some significant amount of profit with multiple entries on this one. So if you still have a buy position running at this point, well, it's quite reasonable that you want to be moving all stop losses to secure the current buy position. And what we are going to be looking at here is anywhere below the $71.80 area. Of course, we want to give room for price action to breed, so place our stop losses around that area. So now with this well secured position at this juncture, what is going to be our next line of action for today? Well, I was able to conduct a comprehensive analysis of the recent price action. At least I looked at what has been happening since the New York session yesterday to dissect and project what to look out for today. And one of the first things I saw here, the first one I saw was this descending trend line after price action tested the $72 level, $72.20 level. We saw some lower highs here to give me a bearish trend line to work with. Then despite the lower highs here, one thing I noticed was there was no lower low to emphasize the strength of the sellers. As you will see, when price action got into that area around the $71.60 area during the early hours of today, we begin to see some buy pressure resume around that area. And as a result of this, I was thinking that this area could be a platform that could incite another wave of bullish momentum. So with the breakout of this trend line here, it's a clear sign that buyers are still very strong in this market. And so with the breakout of structure, we expect that one point in time price is likely going to come back, retest the structure, and if this happens, followed by continued buy pressure above this area, then we will be seeing this as another opportunity to be part of a trend continuation to the upside. So this is how we are going to be looking out for buying opportunity on the US all spot today. So let's see if this platform here, that's $71.60 area, will really serve as a strong demand zone to drive price action to the upside. So these are my views here as regards buying the US all spot for today. So we have two levels here. We have the bearish trend line, which we just identified here, and of course we have the the demand zone, and of course the $71.80 area. All the zone here are areas where if price drops into that structure, is still going to be serving as a platform to buy the US all spot for today. So let's keep this in mind. Let's mark these levels out on our charts. Now, with that being said here, in as much as we're looking out for buying opportunity at this point, considering what has been going on here since the beginning of the week, we cannot ignore the potentials the sellers also have at this particular joint point in time. Now, one of the things that we'll look at here is the continued selling pressure around the $72.20 level. This is the highest point price action has been for this week, and one important feature we've been seeing here is the constant rejection of that zone, hereby giving us an insight into how the buyers are struggling around this area. In fact, a couple of hours ago, we saw a little bit of the breakout of this level here, but price action dropped back. And currently, we have something that looks like an engulfing bearish candle, but we cannot conclude based on this candle yet, as it still have a lifespan of about 22 pips for it to close. So at this point in time, we cannot ignore the potentials the sellers to have here. So if the selling pressure around the $72.20 level persists, then we might likely be seeing a bearish move. Now, if we are going to be joining a bearish momentum here, what do we want to see on this chart that will give us the idea or give us the prospect of negating the bullish buyers we had? Well, for me personally, I would want to see a breakthrough of this demand zone. Remember, I told you since the beginning of today, this zone here has been negating all attempt by the sellers to break through that structure, hereby revealing some buying presence around that area and also a level of buying power there. So if I want to sell the US all spot today, I would rather see price action break through that demand zone, taking out all the buy positions along that area before confirming that we might likely be selling the US all spot. But remember, we are not getting too excited as soon as price break through that structure, as we'll still need to see some confirmation that will help us have that confidence to join the bearish move. And to do that, we shall scale down into a lower time frame. It could be your 5 minutes, 3 minutes, 10 minutes, or even your 15 minutes time frame to look out for a retest of structure, something that will give us signs that sellers are gradually gaining momentum and that buyers are finding it difficult to climb back above the $71.80 level. Then at this point, we want to start considering selling. Then if price action goes on to break through the $71.40 level, then we will be seeing this as another privilege to maximize the bearish move to the downside. So selling the US all spot today is not something we are going to be considering unless price action takes out this demand zone at the $71.60 level. So at this point in time, I still hold on to a bullish bias, and for those who are profitable so far for this week on the US all spot, you want to be having a buy stop order above the $72.20 level with the hopes that price action will continue to the upside. And please let us not forget that we are still at a critical zone here where we had a very strong demand zone, and there's still a possibility that price could still transition into reversal patterns around this area to incite a trend continuation to the upside. So as long as price still remains above this zone, we still have the tendency of buying the US all spot today. And not only if a breakthrough happens, we will start considering selling the US all spot. So these are my views here on the US all spot for today. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next instrument. And you can as well use that time to mark out those levels on your charts or screenshot my screen if you want to. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I will be moving. Okay, I can see some comments. Libadade, good morning to you, Libadade. I'm so glad to have you around. Good morning. Moff G, good morning to you. I wish you success too. Thank you very much. Biskra, okay, good morning, Biskra. 4141, good morning. 4141 wants us to look at the Euro USD. Okay, we don't have this on our watch list for the week, but I will try to see if we could run through this instrument before the end of the session. So try to stay tuned in, and if I can get through with what we are having today quickly, we shall be treating that one. All right. Nest 57, good morning to you. Dino, thank you very much. Crystal, I would advise you to contact, get in touch with the contact center. You will have the details there. They will, they are in the best position to answer your question, Crystal. So try and get in touch with the contact center, and this will be resolved in no time. All right. All right, so in the absence of no questions, let's move on to the next instrument on our watch list. So the next instrument on our watch list is the USTech100. It has been quite an interesting week for us on this instrument. We have been witnessing some volatility, some huge spike in price movement. And let's quickly run through how the week started for us on this commodity. Now, we saw a range at the beginning of the week. It was initially a narrow range where price action was caught within the 15,200 level. That was our initial resistance point, and the 15,170 area before that range now expanded into the 15,230 and of course the 15,150 level to emphasize the level of indecision in this particular market, as you can see here. And what this simply tells us is that there is a high level of indecision in this market, as participants are still trying to test water to see where price action is likely going to be going. And one of the other factors that could affect and contribute to this current setup we are seeing on this chart may be the anticipation of the labor data coming in today, the ADP and employment change, and of course tomorrow we have the non-farm payroll, which majority in the market is looking forward to, as this event will give us an idea and insight into the monetary policy actions the Fed might be taking later this month. And as a result of this, we can see the reflection of dilemma in the market on the chart. Now, yesterday we had a sell position triggered. Remember, we sold at the breakdown of this ascending trend line, which was initially our guide for the week. Remember, we had this ascending trend line, and after price action broke through, retested the trend line, we had a couple of positions there as price moved over about 90 pips in our favor before this bullish traction came in during the New York session yesterday to take us out of that position, with a modest size of profit, as we had 3 positions running at that. So on this move to the upside, we missed out on this one, and we still wait. Price appears to finally go through a normalcy at this point in time. So we are going to be looking at how we are going to be positioning ourselves ahead of today's trading session. So the first thing I would like to do here is to acknowledge what has been going on in the last 48 hours, and that is this pattern that we have here. So we are trying to dissect this pattern to understand the psychology behind the movement of price action here. Now, if you zoom into the structure, one of the things you would notice here is this. Remember last week, Friday, we saw the breakout of the 15,100, you see here. And since we had the breakout of the structure on Friday, price is yet to break down that area. and since then it has happened to be a demand zone. Look at what happened on yesterday morning. We saw buy pressure resume here, and during the early hours of today we begin to see another buy pressure around that area. And in fact, the inability of price action to break the previous low here for me is a sign that we might likely be seeing a bullish momentum anytime soon. So if price action does not break down the previous low, of course we definitely want to be looking out for buying opportunities today. Now, how do we capture this opportunity at this point? So I would like to extend this 15,150, which was one of our support level for the week, where we saw buy pressure. Remember, let me show you quickly. So we saw buy pressure here on Friday. We saw here at the beginning of the week. The same thing happened here on Monday, and then price is back into that zone now. Though we had the breakdown of the structure, but since the breakdown of the 15,150, the bearish momentum wasn't strong, as you will see buy pressure resumed immediately after the breakdown of the structure to give us a clue that buyers are still very strong in this market. And if we look at the engulfing bullish candle that happened yesterday, it's another clue that further buttresses the fact that buyers are still strong in this area. So going into the New York session today, how do we intend to position ourselves for the new day? Now look at this. Look at the impulsive move that brought us into this point, and as soon as price tested the 15,110 ish, we begin to see some buy pressure, which appears that price action might likely transition into what looks like a reversal pattern, probably in the form of a double bottom structure. And you know how we do it whenever we identify a reversal pattern like this. The next thing we want to be doing is to identify the neckline of that reversal pattern, as this will be a platform that will help us validate and confirm the potency of that reversal pattern. So what we are going to be looking out for here is a breakout retest of the structure to give us an opportunity to buy the USTech100 for today. So anywhere above the 15,150 looks very promising to buy the USTech100. So let's endeavor to position ourselves above this level. Mark this level out on your chart, and let's see how we can take advantage of this move. Then this market structure has the privilege of giving us multiple entries to maximize this bullish move. In fact, we have a structure at the 15,200 level. So a breakout retest will welcome more opportunities on the buy position, and a further breakout of the 15,250 will welcome more opportunities to buy the USTech100. So let's mark this out on our chart. Now, in as much as we're looking out for buy positions in this current market structure, we cannot ignore the potentials of sellers too. And for us to be able to sell the USTech100, what do we want to see happen on this chart that will change our buyers from bullish to bearish? Well, since the beginning of last week Friday, remember I showed you this 15,100 level, which has continued to be a strong demand zone since last week, as we saw how sellers struggle as soon as price action got into that area. And in fact, we are yet to see a breakthrough, as what we're seeing here is looking more like a higher low. Now, for me to sell the USTech100, I would rather want to see price action slide through the 15,100 to give us a signal that sellers are coming in. So I want to see a breakdown retest of structure, my lower time frame, to join a bearish move to the downside. So that is how I'm going to be selling the USTech100 for today. And in fact, we could also maximize the potential of that move, that is, be able to sell even before the breakdown of the 15,100 happens. And to do that, we have a trend line. You know, I told you earlier that we have a higher low here. So if we connect the series of higher lows, which could be a potential trend for a potential structure for a bullish momentum, but if price action breaks through that trend line, then we could look out for selling opportunity at the appearance of retest of structure, continue selling pressure, then we could join, then have a sell stop order below the 15,100 to maximize the potential of this move. So that is how we are going to be managing our trades on the USTech100 today. So you would agree with me that we are at a critical confluence in the market right now, where we have something that looks like a reversal pattern. So we have this level marked out on our chart now, 15,150, and of course the 15,100, which we are going to be using to project a bearish move in this market. So let's see how this is going to play out in the next couple of hours. Mark these levels out on your chart, and you want to be using them as a reference point to guide your trading activity for today. So if you have any questions regarding what I just explained, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions in the comment box, and as well you can as well use the time to mark out these levels on your chart or screenshot my screen if you want to, so that you can be able to use them as reference point when you're about to make your independent decision. I see your comment, 4056. Good morning to you. Thank you for checking in. So you are asking how can one increase is gain in trading? Is it by increasing the leverage or by increasing the lot size? Well, it depends on where you are coming from anyways. But one thing I would like to say here is that growing in trading professionally is a gradual thing. So it's over the time. If you have a long-term goal, you will definitely be profitable. So it's advisable to start slow and steady. Have your lot size as minimal as possible. Let it be tailored according to what you can actually risk per each trade. And most times, majority used to talk about majority of traders will say 1%, 2%, 3%, 4%, or 5% of your account on every trade. But this is subject to your own emotional temperament. So it depends on how you can actually manage. So if you can stick to one, just have a risk appetite per trade, stick to it, and I trust me, if you consistently follow your plan, your strategy with this consistent risk appetite, you will definitely be profitable in the long term. So I would advise you not to look at the short-term perspective, but instead look at a long term. So for instance, you can start with a month. So if you start trading today, look at, oh, what can I gain in the next 1 month? So I want you to start thinking in that kind of direction, and with time you will realize that it's quite easy to gain to increase your gains in the financial market. So try and do that. I hope I answered your question. All right. All right, so in the absence of no questions, I want to assume that we're on the same page. So we shall be moving on to the next instrument on our watch list. I think we're having network issues right now. Oh my. All right, let me see. Give me a moment, please. Hello? All right. So sorry for the break in transmission. We had some network technical issues, so I had to um, fall to our backups, and I'm grateful that things are working quite fine right now. So sorry about the break in transmission. So I hope we are back on. Let me know in the comment section if you can see my screen and you can hear my voice clearly. So, in the absence of no questions as regards to the US Tech 100, so we shall be moving on to the next instrument on our watch list. So we still hold on to a bullish bias here, waiting for buying opportunities above the 15,150. So let's see how this will play out in the next couple of hours. So moving on right now, we are going into the GBP USD. Now, on the GBP USD, we have quite an interesting setup going on right now. And in fact, price just skyrocketed and slashing through all the levels we identified yesterday as a key moment to add more position to our existing trade. And for those who are taking advantage of this opportunity, well done to you for being on standby to have caught this move. So let's quickly run through how the week has started for us and how we got to this point we are in right now. So at the beginning of the week, we acknowledged how price action has been ranging actually between the 1.27070, as you can see here. And we also had the support line for the week initially had the 1.26800 level. And remember, I told you I had a sell position after identifying the breakdown of the structure. One was hoping that price action will come back to retest structure to incite another wave of bearish momentum to the downside. But as you can see, buyers took over this market, and during our live session on Tuesday, we acknowledged the higher lows in this market. I think yesterday, of course, and we said we are going to be using this ascending trend line as a yardstick to guide our trading activity for this week. And you know how we use our trend lines here. As long as price remains above the trend line, we feel comfortable in our buy position. Now, going into yesterday's trading session, we had a couple of buy positions. We were taking out at break even at every point in time. Look at what we had here. We had one here. We had two here. This one went into a loss. I think we had a loss on that one. And then all these ones went into break even. As we can see, price did not really move that far. It was moving about 25-30 pips before it drops back into the entry zone, taking us out of that positions had worst case scenario break even. And I know it could be a little bit tiring for majority of us in the house as regards to the price going in and coming out. But one thing about trading the financial market is the tenacity, your perseverance. The more committed you are to your plan, on the long run, it will definitely dovetail to profitability. And look at what happened here. And for the fact that price action still remain above our key level situated at the 1.2700 area, it was still a very good sign for us to continue to hold on to a bullish bias. And I told you yesterday that the only thing that will make us consider selling the GBP USD is to see price action break through that demand zone where a retest of structure or the key level to incite a bearish move, and of course that never happened. So there was no point in time we want to start considering selling the GBP USD at all. So at this point in time, price action is currently running. So from the first position, price action is currently running with about 70 pips. And if you are privileged to take advantage of these multiple entries, you will be having another 60 pips here. And remember, we also identify the 1.272, which will be giving another 50 pips, and the breakout of the 1.274 will be giving about 30 pips in profit. So on this GBPUSD trade alone, we are having over 200 pips in profit on this one. So for those who took advantage of this trading opportunity, well done to you for being on standby to have caught that move. So you can see how it took quite a very long time before we finally saw that bullish traction we were looking out for since the beginning of the week. It took over 3.5 days before we finally saw that traction happen. So well done to everyone who has exercised some level of patience to capture this opportunity to the upside. So with a very profitable position running at this point in time, at least a minimum of 3 positions running in profit, the next thing we want to be doing right now is to secure this current buy position. And the only area I will be suggesting us to secure right now is anywhere below that psychological level around the 1.27500 area and the 1.274. Of course, we want to give room for price action to breathe. So depending on what happens here will now determine what our next line of action will be. Now, for those who had missed out on this opportunity, it doesn't make any sense jumping into a moving trend right now. So you want to remain patient and wait for new structures to mature. And one of the things that we might be looking out for from this current market structure is a potential retracement, since we had a breakout of a significant structure at the 1.274, a level which has been a strong selling niche at the beginning of the week. So with a breakout of the structure, you all know from a technical standpoint, whenever price action breaks out of a structure, we expect that at one point in time it might come back, retest the structure to incite another wave of bullish momentum. So for those who had missed out on this opportunity, this one that is currently running, you have no other choice than to just remain patient and wait for new structures to mature. Now, one of the structures we are looking forward to is a potential retracement back into level or zone to incite another wave of bullish momentum, or we could see a situation where this price action could transition into a trend continuation pattern where the breakout retest of structure will incite another wave to the upside. So we are going to be playing with structures here. So let's remain patient. For those who are already in the buy position, it's time to move your stop losses to secure the current position while we wait out for more opportunities to maximize this move to the upside. So we are going to be waiting for new patterns to form for another trend continuation, and this could take about 3, 4, 5, 6 hours depending on how the market reacts to the ADP employment change, and of course the which other one is that ISM services PMI. So let's see how the market will play out, and trust with the information we have here, we can easily manage our existing position. So if you have any questions regarding what I just explained here, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to read the comment section and see before moving on to the next instrument. All right, in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to our next instrument. So the next instrument on our watch list is the XAUUSD, and on this one I'm already having the buy position triggered at this point in time. So I will share with you how I got into the situation we have right now and how we can maximize the potential move if price action continues to the upside. So first of all, let's kickstart by looking at how the week started for us on the XAUUSD. And remember that we have been buying this commodity since the beginning of the week. Actually, we took advantage of a buy position at the 1,914. We also had another one at the 1,920, and we also had used the trend line as our guide, as we used it to add more position, had the breakout of the 1,925 yesterday before we begin to see this bearish momentum taking us out of all this buy position we were in with some profits, breaking down the structure to the downside. And this morning, while I was trying to decipher what could happen today as regards to the current market structure, I noticed that following this impulsive bearish move to the downside, we saw how price action, as soon as it tested the $1,914.50 level, we begin to see buy pressure resume around this area. And if we go to the past here and look at how price action started the week, remember the first buy position for the week was around that $1,914.50 level. And the inability of sellers to break through the structure was a clear sign that we might likely be seeing this platform serve as a zone that will incite another wave of bullish momentum. Now, coupled with this observation, what I saw next was quite interesting, as I was able to spot an ascending trend line after connecting the series of higher lows. So if you look at the structure closely, you will see that we have been noticing higher lows here. And when we notice higher lows on market structure, it's a clear sign that buyers are gradually gaining momentum. Now, like I was saying earlier, after considering this impulsive bearish move to the downside, it appears that this old higher low thing here is gradually transitioning into a reversal pattern in the form of probably a double bottom structure. And you know what we do here in this community, as soon as we start seeing price action transition into a reversal pattern, the next thing we want to be doing is to identify a neckline that we are going to be using to guide our trading activity. And in fact, a breakout of the trend line will confirm the validity of that reversal pattern. So we had a neckline situated between the $1,921.50 level and of course the $1,920.50 area to give us an opportunity to buy. And with my buy stop order above that structure, I already have a buy position triggered, which is currently running with about 42 pips in profit at this point. And for those who actually saw this and took advantage of this opportunity, well done to you for being on standby to have caught that move. Now, I hope your stop losses are well placed. Some of us don't put stop loss on our trades, which is not a very good habit. So we want to ensure that we have stop losses to secure our portfolio against any further risk of losing more than what we can afford to lose. So now with the situation we have right now with a buy position running, if you took advantage of this opportunity, well, you want to move your stop losses right now to your entry point. Let's secure this current position and let's see how price action will play out going forward. But for those who had missed out on this opportunity, it's okay. I still think that we still have the opportunity of maximizing this of milking this bullish move at the formation of a new structure. Now, to further emphasize the potentials of the buyers here, remember we had a descending trend line at the beginning of the week, which was one of the parameters we were using to guide our trading activity. And for the fact that this trend line also shares a confluence with the neckline of that potential reversal pattern we just identified, and with a significant breakout of both of the structure, I'm of an opinion that we might likely be seeing another strong bullish move to the upside. Now, with the situation we have right now, for those who have missed out on this opportunity, I still think that market might still come back to retest the structure that was broken. As you all know, when price action breaks out of a key significant structure, we expect a retest of structure to incite the trend continuation to the upside. And in fact, if a retest happens, it will also share a confluence with the ascending trend line, we identified earlier. So this trend line here will be our guide for this current bullish momentum. So what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in our buy position, while we also look out for more opportunities to maximize this move. Now, one more thing I would like to state here is that this current market structure has a potential of giving us multiple entries, as we have levels, psychological levels, such as the 1925 area, which we are going to be using to maximize this move at the breakout retest of structure. Then we also have one at the 1930 and another one at the 1933. So these are levels that we are going to be using to maximize the potential of this bullish move. So let's see how price action will play out. We hold on to a bullish bias on the XAUUSD. Now, in as much as we're looking out for buying opportunity, like we always say here, the only thing that will make me start considering selling here is for price action to breach this our key level. So this our key trend line, which is the ascending trend line on your screen, which also shares a confluence with the 1920 zone. So a breakdown retest will definitely be an opportunity to sell. So if price still remains above this ascending trend line, we have no choice than to remain bullish on this commodity. So let's mark these levels out on our chart so that we can use them as a reference point to guide our trading activity for today. So I will be taking the next 10 to 15 seconds to give you the time to mark these levels out. Ask your questions if you want to, and let's see how it goes. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next instrument on our watch list. So the next instrument on our watch list is the USDJPY, and finally we had a significant breakdown of that range bound market structure we have observed since the beginning of this week. Now let's quickly run through how the week started for us. And in fact, at the beginning of the week, we had a very wide range where price action has been ranging between the 144.900 level and of course the 144.200 level, which happens to be our key level for the week. And you know how we do it whenever we have a flat channel like this. We always want to remain patient, waiting for structures like a breakout or breakdown of that range to give us an opportunity to buy or sell. And I told you yesterday that I also considered the fact that we might want to be able to join a move even before the breakout or breakdown of that range happen. So I told you yesterday I was around this area in the morning where I tried to calculate what is the number of pips between the current price move action and the resistance line, which was about 42 pips. And if we look at from this level to the support line, it was about 35 pips. So I was thinking, how can I maximize this move by joining early enough even before either the breakout of the resistance line or the support line happens? And to guide that trading activity yesterday, we were able to spot a key level at the 144.450, which we said anytime price drops below this level, we are going to be looking out for selling opportunities. Then in addition to that level was this ascending trend line, which we saw here. And look at how beautiful that trend line was positioned for us. And one thing we said during the live session yesterday is that a breakdown retest of the structure will be what we are going to be looking out for to sell the USDJPY. And if you look at what has been happening here in the last 24 hours, we saw the breakdown happen. And if you had missed out on that one, we saw how price came back to retest structure. If you had missed out on that one again, you will see how price action came back again to retest the structure multiple times before the bearish move began to the downside. So it was quite an interesting scenario here on the USDJPY between the later part of the New York session and this morning. And for those who took advantage of this opportunity, well done to you for being on standby and remaining patient to capitalize on this move. So currently you will have a minimum of, let's see, the first position running with about 60 pips, and the second position here had the breakdown of the support line for the week at 144.230 with about 36 pips in profit. So you're roughly approximately about 100 pips right now on this instrument. So you know how we do it. The next thing we want to be doing right now is to secure this current sell position by moving our stop losses accordingly. So personally, I'm still not seeing this move as a significant profit we can hold on for the week, as we'll still need some room for price action to breach. So our stop losses is going to be somewhere around the 144.200 and that area around the 144.300. And of course, we definitely want to give room for price action to breed with the hopes that price will still continue to the downside. So with a well-secured position at this point, and for those who had missed out on this opportunity, how do we intend to maximize this bearish move? Is it still going to hold on? Is this bearish momentum still going to hold, or are we going to be having a momentum shift anytime soon? Well, if we are looking at this from a technical standpoint, remember we already had the breakdown of that our key level for the week, which is situated at the 144.200 broken to the downside. And if from a technical standpoint, we expect that when price action breaks down a key structure like this, we expect price to come back, retest the structure, followed by selling pressure to incite another bearish move to the downside, which will be a trend continuation. Now, with the situation we have right now, a whole lot of patience is required here. So for those who had missed out, let's wait and see if the market will come back and retest the structure to incite a bearish move to the downside. And one of the things we are going to be looking at around this area, even if price does not come back into that zone, one thing we want to be taking note of here is higher lows. So sorry, lower highs. When we start seeing lower highs, then we want to begin to get ready to be part of a bearish move to the downside. So you want to capitalize on that one too as well. Then in addition to that one, we have the lowest point where price action has been for this week, which is situated at the 143.550. So you want to be labeling this on your chart right now, as we are going to be using this as a reference point to guide more trading opportunities in this particular market. So I want to be seeing another breakdown retest of the 143.550 to capture more selling opportunities to the downside. So that is the only thing I will be saying here to add more position to my existing trade. Now, in as much as we're looking out for selling opportunities, you know how we do it in this community. We always want to keep tabs with the opposite direction too as well, so that whenever the opposite of what we discussed happens, we are also going to be on standby to catch that move. Now, looking at what we have here, when price action came into the structure during the early hours of today, we saw a sharp rejection of that area by buyers, hereby negating all attempt by the sellers to break through that level. Now, one other thing I saw here is the nature of these candles that rejected that zone. And you can see we have something that looks like an hammer candle, which from a technical standpoint is a candle that reflects the presence of buyers at this juncture. And with this observation here, we need to be very careful. That is why I said we are not going to be adding more position unless we have a breakdown of this level. And the reason why that is simply because this whole structure here could transition into a reversal pattern, probably in the form of a double bottom structure, to incite another wave of bullish momentum. And if that is going to be the case, we want to be on standby to catch that move. Excuse me. So if this turns out to be a higher low, so this is the lowest point price has been for this week, and if price finds it difficult to break below the previous low, then we have a higher low And if we do have a higher low, then we shall be using that to guide a potential move to the upside. And if we are going to be buying, we should have a neckline which will fall probably anywhere around that key level, where a breakout retest will confirm that momentum to the upside. So that is how we are going to be looking out for any buying opportunity on the USDJPY for today. So it's a simple setup we want to take advantage of. Mark these levels out on your chart, and let's see how we can maximize this move in any direction price action will be going. So it has been a wonderful moment with you guys today. I'm very grateful for life and grateful for the privilege and opportunity to be with you here this morning to discuss and share with you my insight into what my expectations are for today's trading session. And I hope you are able to gain one or two things from what we discussed today. And for the newcomers in the house, I hope you are also able to gain something to use as a guide during your trading sessions today. And one advice I have for the newcomers is that try as much as possible to stay tuned in with us. The more time you spend with us, the better you'll become in understanding how this works, and you'll be able to eventually use the information you have gathered here to make your independent decision on your account. So I look forward to seeing you again tomorrow, guys, and same time, 10 a.m. UTC, 11 a.m. West African time, so that we can come here and review how well this financial instrument has been doing so far. And at the same time, let us get ready for the NFP data coming in tomorrow, which is also going to be the last trading day of the week. So I wish you all best of luck and do have a wonderful and beautiful evening. Bye-bye, everyone.